Asset allocation. Now, this word you might have heard everywhere and anywhere if you are an investor or if you are in investment management services. And in this video, I'm going to be discussing with you at length what is asset allocation, what kind of asset allocation which we need to advise to our client as a mutual fund distributor, what should be the roadmap, and what we ultimately want to achieve through asset allocation. Now, you might have heard this quote that the majority of the returns of your client portfolio is going to be defined by the asset allocation which he is going to do. And in this video, I am going to be diving into much deeper into various aspects of asset allocation. Hello everyone, I'm Shobhit. I'm a FinBiz growth expert and founder of FinBiz Growth Club. We are an aspiring community of new age mutual fund distributors who are determined to change how India invests. So first, let's understand what is asset allocation. Now, how I look at it is, if you look at asset allocation as the name suggests, you are going to be distributing your resources into multiple asset class. So it may be equity, it may be gold, it may be debt, it may be real estate. So whatever assets you can think about, if you are going to be distributing your resources into multiple asset class, it is called asset allocation. Now, why asset allocation is important? Now, you need to understand every asset class are going to give you a different kind of returns over a various period of time. More importantly, the asset allocation purpose is to distribute our assets into various asset classes where the correlation of the performance is going to be very, very low or negative. Now, what we mean by that, we need to understand if in our asset which is giving us a positive return, we need to be making sure that we are going to be putting some money into other asset class where the correlation of the performance is going to be very low. So if let's take an example, if equity is going to give us, say, in a year's 20% return, we are looking for some asset classes which is going to have a low correlation. So it can give you a low return or a opposite return, if I may say, so that whenever your equity as an asset class is not going to give you a good return or negative return, other asset class is going to perform better, and that can be a good hedging for you as well as for your investor. So it has been often seen that if the equity is not performing well, the debt is going to cushion your downside portfolio. So that insight we need to have, that whenever we are doing an asset allocation, the first thing which we need to keep in mind, if I am going to put my clients or my money into various asset classes, I need to be making sure that the correlation between their performance should be very, very low. Then only the real hedging is going to come. Other insight which I want you guys to understand when you are giving a multi asset or doing an asset allocation to your client, that asset allocation is not to enhance the return of your client's portfolio. You need to be very, very clear for what reason you are doing asset allocation for your client. The third insight which I want to share with you here today is this. Most of the time, the distributor community is going to be building a multi-scheme portfolio and not multi-asset portfolio. So if you're thinking that if you're going to give a large cap or a mid cap or a multi cap or a small cap fund to your client's portfolio is diversified, you are wrongly placed. You need to understand all these schemes are into one asset class, which is equity. If you really want to diversify the portfolio of a client, you need to choose those mutual fund schemes which can help them diversifying their portfolio into multiple asset class. So these are the reasons for which you need to do the asset allocation to help your client in reducing the volatility in the portfolio. Now, once you are clear that why you need to do the asset allocation, let's understand what we are going to achieve once we do the asset allocation. So as I told you, the first goal for doing an asset allocation is to generate better risk-adjusted return. Never be under impression that if I am going to diversify my client resources into multiple asset class, it is going to increase the portfolio return. it is definitely going to increase the better risk adjusted return. Now you cannot imagine, or you should not be under impression that the kind of returns which equity as an asset class is going to generate over a longer period of time, same kind of returns you can expect in debt or gold or real estate. Some can give, or like equity historically is going to give you the highest return over a period of time. Then your debt or gold are going to give you a lower return, if I may say, compared to equity. So the logical question which you need to address is why I am going to be putting money into those asset class which is not going to give you the kind of return which equities can give. The answer lies, as I told you, in the low correlation between the performance of various asset classes. So if you are going to put all your money into equities, let's say for example, and if the market is not doing well for a longer stretch of time, your client can go for a toss in case he requires any cash flow. But if you are going to have a portfolio which is going to be having diversification into equity, debt, gold, real estate, foreign investment, and so on and so forth, then it is very likely that if equity is not doing well, the other asset classes are going to cushion the downside of the portfolio. And that should be the goal which we want to achieve when we are going to be putting our money into multiple asset class. Again, I'm going to repeat, the purpose of asset allocation or the goal of asset allocation is not to enhance the return of the portfolio, but to enhance the better risk-adjusted return of the portfolio. Then you need to remember the quote of Warren Buffett as well. He says, the first rule of wealth creation is to never lose money. And what is the second rule? Never forget the rule number one. So if you're able to protect the downside of your client's portfolio, your upside will be automatically taken care of. The other goal which you are going to be achieving if you are going to be doing a proper asset allocation for your client, that you are going to be making sure that you are having enough resources to reallocate to a proper time or opportune time. Now, what I mean by that, in case you find any huge correction happening in any one asset class, you will be able to move money from other asset class to the asset class where the opportunity arises. The same is possible that to book the profit from some other asset class which has performed very well to reduce the risk in the investment. So reallocation of resources can happen if you have a proper asset allocation where you will be able to move money from one asset class to another asset class. And this is also going to be a wonderful goal which you will be able to achieve and enhance risk-adjusted return for your client. So these are the goals for which you need to be looking to have a proper asset allocation for your client. Now let's come to the last part. What should be the roadmap or how you need to do the asset allocation? What are the parameters? What are the insights which you need to be looking at when you are going to be doing an asset allocation? Now, the proportion in which you are going to be distributing the resource of your client into multiple asset classes will depend upon multiple things. The first thing which you need to be keeping in mind when you are going to be distributing resource into multiple asset class is the time horizon for which your client wants to invest. So if he wants to invest for 6 months, 1 year, 5 years, 10 years, that also is going to give you lot of ideas like what kind of asset distribution or resource distribution you are going to be doing for your client. So if your client is going to invest for say less than a year, the debt allocation should be more. If it is more than 5 years, the equity allocation should be more. So those insights you are going to get from the time horizon for which you are going to be or for which your client is going to do the investment. The second is, which most of us are ignoring, is the quantum of resource or asset which your client wants to invest. That also should be determining what kind of asset allocation you should be doing for your client. You need to remember that if your client is going to invest say 1 lakh rupees, then it doesn't make sense to diversify into too many asset classes. Depending upon the quantum or resource which your client is going to be putting for those investments, that also should be keeping in consideration when you are going to be planning the asset allocation of your client. The third and most important thing is you need to look at the risk profile of your client. And when we talk about risk profile, what we mean, you need to look at his age, the number of earning members in the family, the number of dependents, the quantum of liability. These all are going to determine what kind of asset allocation you need to give to your client. We have a very rigorous process in our community to train our community members as a mutual fund distributor as how they need to find the right balance between the performance of the portfolio and the risk according to the various parameters, so that you can give a right asset allocation to your client. This right asset allocation is not only going to give a better risk adjusted return for your client, but it is going to help you as a mutual fund distributor to motivate your client to stay in those investment journey for the longer period of time. And we both know very well the mantra for success of wealth creation is the time. The longer your client is going to stay in those investment, the more wealth creation is going to happen, and that's what we all as a mutual fund distributor is aspiring to do. So I want you guys to be very clear that what kind of asset allocation you need to do and what should be the goal for you and how you are going to be giving all those insights and creating a better risk adjusted portfolio for your client. I hope I have given you some new dimensions, new thought as how you need to approach for the portfolio building for your clients, and now you are going to be thinking in a much clearer direction as what kind of portfolio you want to make for your client. In case you love the content, I would love you guys to hit the subscribe button, give us a thumbs up so that whenever we have something new to share to you, you guys will be the first one to know. Thanks for watching. I'm going to see you next time.